Welcome to the Ecom Collab Club podcast, where operators, risk takers, and battle-tested founders drop the lessons that cost them time, money, and their sanity, and share what actually works so you don't have to pay the same price. Hosted by Peter Gardner and Adam Pearce, founders of the Ecom Collab Club and Blend Commerce, the Shopify CRO agency, and proudly sponsored by OmniSend. Email and SMS marketing so good, it's boring.
So picture this, you've nailed the product market fit, your sales on the up, but your cash flow looks more like a 5-set tie break than a smooth rally. Now, do you swing for outside money? Do you stick to bootstrapping, or do you try on those fintech easy money serves? Now, today we are talking to someone who's played all those points, both literally and figuratively, and that is ex-pro tennis player Jack Oswald turned a courtside frustration into Cancha, which is a modular bag brand now shipping worldwide. Now, importantly for today, he did it by mixing sweat equity with smart external funding like crowdfunding. So guys, grab your seat in the player's box, folks. We are serving some real funding and valuation lessons for brands that want to grow without giving away the game.
Wow, Mr. Pearce, that was pretty smooth, eh?
Well, yeah, I love the tennis references.
Yeah.
And I'm just going to probably lay off those a little bit. I'm going to try and get juice in there at some point.
No.
I'll slip them in as we go through, But I'm sure
Jack, does that already come because you've already got it in now?
Well, yeah, I don't know. We'll see. I'll keep a score.
Jack, welcome to the podcast, mate. It's good to have you on. For anyone that doesn't know you yet, who are you? What kept you grinding across 30+ countries on the tennis circuits? And how did that journey turn into designing bags and running Cancha?
Yeah, so yeah, I'm Jack. I'm originally a tennis player, like as we mentioned. So I spent a lot of years chasing ranking points and, to be honest, paychecks across like a lot of different countries, mostly on a shoestring. So I think it was a mix of passion for the sport, stubbornness, maybe a bit of entrepreneurial spirit even within the sport of tennis, and that sort of kept me going. So I started playing tennis since I was 5 years old, and I'm going to be 30 in a few months now. So I've been playing the game for a long time, but it was always from a young age a passion of mine to play professionally, and I got the opportunity to travel a lot and play and compete in professional tournaments. And as I was doing that, I was obviously traveling a lot with gear, and so I got pretty obsessed with making it easier for myself to travel with all my equipment and go from place to place, and especially like the main thing I was living out of, which was really bags. In 2019, 2020, I started just designing, trying to make better bags for myself, like tennis bags and travel bags that would actually kind of allow me to travel more easily with my gear. And as I was doing that, kind of was sharing it with other players, with other people, kind of just learning a lot about how other people were traveling and their feedback and stuff like that. And it sort of turned into really inadvertently a business, because I realized that I could make it easier for people to not just pro players to travel and carry their stuff, but also just the average person to fit their favorite activities into their daily routine, whether they're playing tennis in the morning, or before they go to work, or they're taking their rackets on a holiday, or whatever it is. That's kind of what it's kind of stemmed out of. And so it's been a hell of a ride, sort of almost 5 years in now. So they're still around. That's the main thing. I'm still here.
That's good, mate. So let's take a little step back. So how long were you on the professional circuit for?
I think I played my first pro event when I was 17. And so, yeah, play a lot of, I think, so I played a lot of tournaments throughout that time, between, I suppose I stopped playing seriously when I was about 25. I'll probably make that, maths out, I think. So it was quite a lot of time. I did go to university and stuff towards the end during that time. So I was kind of studying and playing at the same time. So between sort of 17 and 21, 22, I was playing full time, and then I was studying at the same time, and sort of playing for university, and then also traveling in the summer months and all those sort of things. So yeah, it's the best part of like maybe 7 or 8 years.
Oh wow, okay. And any name drops that you can say, like, hey, wow, I played against this guy and I beat them?
So yes, I mean, I played against maybe some. I mean, not anyone maybe you would know. Like, I mean, I definitely got to practice with a lot of good players. I was, you know,
Yeah.
like Murray and top UK players like that. I was able to, you know, hit with them and practice, especially when things like Wimbledon come up and you get asked to warm them up and stuff like that.
Yeah.
So that was a lot of fun, and I learned a lot from being able to meet them and kind of just their work ethic and stuff like that. And then
Yeah.
just, you know, I think the tennis tour is interesting because unlike, say, football, where if you're maybe the top 2,000 best football in the world, you're probably earning a pretty good living. Whereas in tennis, it's not the case, right? So if you're, you know, ranked 2,000 in the world in tennis, you're earning, you know, maybe a couple of $1,000s a year or something, a few $1,000s a year. Whereas, I mean, depends on kind of how you're doing, but you know, it's and then it goes up and up from there. But even the top 200 players are struggling to cover their
Yeah.
expenses, and expenses are expensive. So, yeah, it's kind of quite structured in the way that maybe you wouldn't necessarily play the top players until you really get to the very cream of the crop. But
Yeah.
it was a lot of fun.
Yeah. So I'm guessing that, you know, with the angle that we're taking on this podcast, that experience of being a professional, but not in that like bigger that pay bracket, it sort of gave you the understanding of bootstrapping and making sure that you could get yourself in that career.
Yeah,
And
absolutely. I think. Oh, sorry. I think it's been I mean, my whole tennis career was very much like living on a shoestring in terms of, and many
yeah.
other players the same, because of, you
Mm.
know, you're trying to just cover your next trip, and share as many expenses as possible. I got very used to kind of sleeping on floors
The
and
sound
getting
off.
yeah, getting, and you know, and also not always in the nicest of places. Sometimes you got to see
Mm.
amazing places. Other times, you know, you're just in the middle of nowhere, kind of, 30 plus degrees at night, no air conditioning, like sleeping on the floor sort of thing. So you kind of get used to kind of taking the good with the bad,
Mm.
and being just quite economical, being smart about planning, and I think that's something I definitely did take into business, in the sense that I kind of, I was okay with being scrappy, I guess, is kind of the way to put
Yeah.
it.
Yeah. So what was that? What is that first light bulb moment? You mentioned that you obviously started to design bags for yourself because you had that issue of nothing sort of was out there that was good enough for you. But what is that point when you realize, look, I'm doing this for myself, but there is actually a business to be had here?
Yeah, because it very much did just start with myself, because tennis is a very kind of solo sport, and I was that's one thing as well, is you become very kind of you, really kind of just selfish in many ways, because you're thinking about yourself and your own career and things. And so, yeah, I mean, it was really just as I got to these tournaments, I was starting to meet other people at clubs. People come to watch us. There would, just members of the clubs or just everyday people, and I would start to kind of, they'd see my bag, they'd ask me about it, and I'd start to kind of learn about what they were using, why they were finding it annoying. And I also just knew the tennis industry very well, so I very much started with tennis. And I knew that most tennis brands in the industry were kind of making very cheap bags that were, no different from the rest, and they were just used to kind of almost as a loss leader to sell,
Yeah.
higher margin things, maybe like tennis rackets and stuff like that. And so there was really no innovation in the market. I knew that within tennis, and so I knew that just doing something better could be good. And then also, just because I was kind of getting used to other people telling me that, like, they couldn't take their rackets on an airplane, or they couldn't, they could, you just take, like, the annoying things about taking tennis rackets to work and stuff like that, and the traveling annoyances of playing a sport, was kind of universal, I think.
Cool. And what's been the biggest culture shock from moving from that solo life of tennis to leading a growing team and supply chain and producing bags and selling them globally? What's been
Yeah,
the biggest change for you?
I think it's been both. I think something I've done realize is that, like, the power of relationships. I mean, people say networking. I think more of it just relationships in general in business. I think there's importance in that in sport, is meeting the right people, getting people behind what you're doing, and also having, them supporting you, and even like supporting other, athletes and things. But in businesses, it's huge. It's a huge thing, I think, whether it's, having really good relationships with your suppliers, which is something is so important, because when it comes down to it, especially when you're starting up, and maybe you're 3 weeks late on paying a purchase order, and you've got to ask them if they can still ship it, or or whatever it is, those kind of relationships start to really matter.
Mm.
relationships on the retail side, relationships with, on the marketing side, just, meeting people who can help you along, and also, returning the favor, I found is so important. And that's why something I really like about e-commerce, I suppose, specifically that kind of D2C community, is there's a huge amount of like just kind of helping other people along on the way, and just kind of like mutual kind of just I think a lot of respect for other people. And I think that's something that maybe in the tennis, when you're an athlete, it's very much kind of almost like competitive, whereas I don't, while business is obviously a very competitive environment, I've met a lot of people along the way, just like in the Econ Co Club community, like just people who are just willing to help other people along, and for no net benefit necessarily to themselves. And it's kind of that community that helps build everyone up.
Yeah, 100%. So I've got to ask, because we've had an athlete on here before, professional athlete or business owner, which is harder?
Yeah, I mean, I do think, I do think definitely being an athlete is harder in the respect that like it's you've got to make, especially in like when you're in the moment of say a tennis match, or whatever sport it is, you've got milliseconds to make decisions, which is really hard. You've really got hardly any time to make decisions. Whereas one thing I find really nice about business is that often you can sleep on something and figure it out, or you've got a little bit of time, often, not always, but often, to make decisions. And that's changed the game for me, because I can really kind of strategize about things. And actually sometimes one of the frustrating things about a sport is that you realize seconds after you've done something that was the wrong decision, but you can't take it back, or you didn't have the time to properly process it. So something I think is easier about business. I think one thing that's harder about business is that I think there are still a lot of things outside your control, and you also, things like building a team and things like that is hard, but also vital. And finding the right people, and you depend on a lot of other people. I think, as much as people want to, it's very, you can't really build a business on your own. And so I think it's kind of that side of things is quite, whereas as a tennis player, you do have support, but a lot of the time it's, it's you and all the work you do, or like, especially in tennis, I suppose. In other sports, it's, team sports is a bit more about the team, but I guess business is a bit more like a team sport.
Because I think the thing as well, Jack, like today we're talking obviously about funding and finance, and you said that point there about you can't build a business sort of as an individual. You need to have a team. And I think what I wanted to talk about initially was, I know that you've obviously in terms of the growth, you've used external money for obviously growing the D2C brand. What I want to ask is sort of, I guess, in a plain English way, from your perspective, looking at external funding, what does that look like for ecom brands, sort of beyond just the kind of the bank loans and Visa? I guess what I'm asking is, what have you been involved with in external funding, and how does that actually look, and what does it feel like?
Yeah, I think funding is always a really tough thing in e-commerce, especially I think at the beginning, because you haven't got reputation, you haven't got maybe the cash flow to demonstrate. You haven't got like, I think that even like the list of like the customer base, that can help you along with certain things. So it is really tough at the beginning. I think one thing I've learned over time is like how much you can do on quite a little bit of amount of financing at the beginning. And I think, it's getting easier and easier nowadays, like to be able to test things quickly, to be able to figure out what works without spending a whole lot of money, whether it's in ads, whether it's on, with product. It's getting easier nowadays to do like, say, lower order quantities of a product than it was, say, even 15 years ago. So I definitely think that you can do more with less nowadays. But I think that there's a lot of other opportunities for finance in terms of, obviously we know, like you said, bank loans, seller financing, investment, and I've done all of those. But I do think that there is a huge amount of financing can actually come from your own customers. Things like crowdfunding, things like, limited drops, wait lists for products, all that sort of stuff is something I've really tried to leverage. Probably not soon enough, which I would have done earlier, but I think it's been a huge part in kind of allowing us to launch new products. I think is that, especially that kind of getting customers involved in that process.
So you mentioned seller funding there. Can you just run us through what that actually is and how it worked for you?
Yeah, so I guess I'm referring to kind of more like your standard, say something like Shopify Capital or Wayfair, or all those ones out that I think that now there's pros and cons of those things. I mean, I've taken a lot of, in the past, a lot of Shopify Capital loans, a lot of Wayflyer loans, and learned the ups and downs of doing that, because, you know, a lot of these loans are, you know, they're a percentage of your sales, and in some ways, you know, it's that's something, again, that didn't exist 10 or 15 years ago. So it's an opportunity in many ways for brands, because they, you know, that sort of source of finances wasn't there. On the other hand, it can really eat into your profit margin and your cash flow, because, you know, if you're giving away 17-20% of your daily sales, that's often your any margin you had gone, basically, on paying that loan back. So I think you've got to be really careful about these things. I think I don't try to look at it too negatively or too positively, one or the other. I think there's times and places to use that type of financing. But I think it's really important to kind of to work out the maths behind it. I think that's kind of the important part, especially with like those sort of seller financing loans.
And what the other two that you mentioned there? Is, I know we're going to talk about obviously crowdfunding a little bit later on, but the other two you mentioned were.
Well, I mean, we have raised some money. So we did raise some money at the beginning, and I know that we did that in sort of 2021, which was a lot easier time to do that sort of thing that it is nowadays. So I sympathize with maybe someone starting now who maybe feels like the market isn't very receptive to that type of thing. And I think that that's you know, I think I would, if I could go back, I would use that more as kind of a secondary or even tertiary type of source of funding, and not something to do at the beginning, because I think you can make a lot of progress before that point. Depends on your product entirely, of course. You know, if you're selling mattresses or something, you're gonna struggle with capital. But yeah, I think it kind of depends a little bit. But that's what I would say. I think there's I don't think that e-commerce is not investable, but I think that it's harder to do so nowadays. So I think there's a lot of other opportunities to kind of get your business going and reach kind of a bit of product market fit before maybe you look into that.
Definitely. Okay, cool. I mean, the other side of this, I guess, as well, then, is, like you said, there's lots of options there, like you said, and I think it is important. You really need to understand the numbers, both short term and long term, because I think that's what, you know, the experience I've had with brands who's had a bad experience. I think that particularly they didn't really understand, like you said there, with the seller-based financing, those kind of, you know, loans that are based on revenue, the impact that's going to then make to them on a day-to-day basis. But in terms of your experience with Cancha, were there any kind of early signals that you saw that said to you, look, we need this cash, we need to look for that outside investment, and then you were proved right? And there are any situations where you've kind of gone, look, we did go for cash at that moment because we thought this was a signal, but in reality that we really didn't need it at that time?
Yeah, I mean, to be perfectly transparent about it, I mean, as much as like I think that we've done a good job getting to where we are now, you learn a lot over that period of time. And I think that while, you know, naive me 4 or 5 years ago thought that, you know, we had product market fit, what I've kind of learned over time is that product market fit almost kind of evolves over time. I don't think, in my opinion, I don't think you get to a point where suddenly you just reach product market fit. I think your product gets better, you address people's needs better, you improve over time, you get better and better and better. And I think that sometimes you can kind of raise funding on the kind of the premise that you're there, or that you just need money to then scale, and it's not necessarily the case. And so that caused us to order too much inventory, that caused us to expand our product line too much, when actually maybe 2 or 3 of us, well, maybe even 1 or 2 of our SKUs were the best selling SKUs. We probably could have hit 80-90% of those sales on just that 1 SKU, or 2 SKUs. So you kind of start to realize that, was that money well spent? You know, I don't know. I mean, I think I've learned a huge amount from that. And so, but I don't necessarily think I would do it again. So I think that that's part of the problem, I think, is that when that bulk amount of cash comes in, you don't always use it in the right way. I mean, maybe it's just me, but I think that, you know, that's part of the problem with e-commerce, is that there's just so many things you can do with that cash. I mean, you can put it back into into marketing, you can put it back into new products, you can just increase the amount of inventory you have. And I think that sometimes you have almost a little bit too much cash at one point. And since then, it's been absolutely opposite. I've always been, you know, overly lean with cash. As much as you want to have more cash in the bank account, I think I've been a bit very lean with things, and therefore, you know, I haven't been able to make those choices. And actually, I've made better choices as a result, to be honest.
I mean, the other thing that I'm curious on as well here, and look, we've done a couple of shows now where we've talked about different angles and aspects on financing, is that, look, from a personal point of view, you know, if you were building something or growing something, i.e. a home, you would go to a mortgage advisor or you would go to a bank.
Yeah.
Is there any one or any kind of service that you know of or you engage with where you had some solid advice on the different types of financing to take?
Yeah, to be honest, no. I think that I've kind of learned the hard way, to be perfectly honest, just by testing all these things and finding out. You know, I mean, you do speak to a lot of. I mean, I think any you know founder is kind of speaking to various different people about these things and getting their opinions. But it is tough. I think, especially I've always had the tough situation where I think I've had people in sort of business who I've spoken to, but not necessarily who have a lot of experience in e-commerce or that kind of. And I think because it's relatively new, you know, so I think that, especially even like speaking to someone like an investor or something, where you know that it's just not, it's unlikely to be their background. So I think that it is. I think the community, just like being involved in communities and things in e-commerce, is really important. I think because you start to learn in real time what other people are trying and doing and sharing. I think that's really important. I think that certainly helped me, definitely. And meeting other people who are in a similar like situation, like, or at least kind of like trajectories as you, and kind of where what they're doing and what they've learned. I try and share with other people of what I'm going through, and they share with me. So I think that's probably been the only thing that's been that as amazingly helpful. I think more and more resources come about from a financing perspective, but I do think for e-commerce brands it isn't easy, because there are actually quite a few options out there, but it depends on what stage of business you're in.
Yeah, and I think, look, a lot of the time they're presented, the options out there are presented by the people who are selling them.
Yeah.
Yeah, I think that's a really valid point. You know, if you are a brand and you're not doing the things that Jack is doing, which is, you know, getting out there and talking to the people about their experiences, then that's what you've got to do, because ultimately you need that kind of recommendation, that verification, if there isn't someone there independent who's going to be able to advise you. So yeah, cool. Thanks very much.
It sounds like you've just uncovered a business opportunity in the e-commerce space there, mortgage brokers for e-commerce. Jack, let's get into you guys crowdfunded, right? So I'm not dreaming it up. You did crowdfund to get started. Indiegogo,
yeah.
Was that where you guys got on?
Yes,
cool.
Sorry, God, yeah.
No, you carry on.
Yeah, so when I very first started Cancha, I did crowdfund it, and I think we did not raise a huge amount of money. I'll say that first of all. I think we did maybe like $5,000 or something. You know, it wasn't.
Okay.
But I knew nothing about. I mean, this is like, I think it was 2019 even, when I was just designing the bags, and I think the whole premise of our products was very different. So I think when I first started Cancha, actually the idea behind it was kind of like a main backpack, and you had add-ons for tennis or for the gym or for whatever, and it's very much expanded differently since then, where we have like main bags for, say, tennis, but we have add-ons around tennis, and we have maybe like paddle, or even just like outdoor bag, and then we have various different accessories around that. So very much more speaking to a certain audience with our product line. But the beginning, it was very different. And when I first, and I think that's my main thing around crowdfunding, is that raise, I mean, I wasn't particularly happy with, right? I think I was hoping to do a lot better. That being said, I really didn't know what I was doing either back then. Not that I know a huge amount now, but I knew less. And so I think that because of that, I kind of learned actually to pivot on the product line and kind of what we were doing. And that's would be my main thing around kind of crowdfunding, is that it's a huge opportunity to actually just test your product with, you know, very little investment, right? We hadn't built a single, I mean, like, apart from like prototyping bags, we hadn't produced a single like production unit of bags when we did that. And I'd learned, you know, what to do next from that experience. So since then, we've done various different crowdfunding things since then, and you know, more successful definitely than that initial one, but not so much on crowdfunding platforms, because as we built our audience, we've gone back and done it on and we've done it in various different ways. So not necessarily we've done crowdfunding this year on a new bag for paddle, but we've also done things like limited drops and new colorways and things like that, which in some ways is a bit like crowdfunding, because you can kind of hedge your bets on things. You can say, we'll do this in a very limited quantity, see kind of like how big the wait list is for this, or see how, if we drop 100, how quickly do they sell out? Oh, okay, that one's done well. Let's make more of that next time. So I think there's a huge amount of opportunities around these type of things to kind of really quickly test.
So that's awesome. I also believe that you call it the community building tool for you as well.
Yeah, because and I wouldn't say, I think there's a huge amount of ways to build community, but I do think crowdfunding a product is huge. A big brand that I've always been looking at for kind of inspiration is Peak Design. It's started off as a sort of a camera bag brand. They expanded out beyond that, but they do amazing Kickstarter campaigns and things. But one of the things the reasons they do it, because Kickstarter is kind of an outdated platform in many ways. So you go on there and it looks like Shopify when it first started, like even worse than that, So, but they still use it because they can get this outside community, and they've kind of built up a community around people who really want to back their projects and things. And so, the main takeaway from that is that they understand the benefit of this community building when you're launching something. Getting people behind the products that you're launching, having them be early backers is usually a good signal that they're going to back other things in the future, but also probably going to come back to you many times. So I think that that sort of thing is really important. It's been important for Cancha. I think a lot of our customers are really excited to be the first to order a new bag we're launching. To back it. We try and be very transparent about how much we've raised, about when it's been shipping, like what the process behind it all is, and production, things like that. So I think that community side of things is a bit different from your average community, where you kind of think about maybe like a social media community, like followers, or you think about almost like a community like on like Discord or something like that, which are all hugely beneficial as well. I just think that crowdfunding is sometimes overlooked as a community source.
Yeah. I love that you're doing that, and I think I've spoken a few times on this podcast about. I still feel like the word community in e-commerce is the wrong word, and it is more of going to your customers, getting their feedback on products, getting their understanding, getting their buy-in to your brand. That's the community piece. And it's almost just the wrong word, and that's why a lot of people get that confused, in my opinion. But that's cool. So let's go back in time and let's go, okay, cool. You're going to do that first crowdfunding again. What would you do differently?
I think, well, I've learned quite a few different things. Yeah. So I think my first thing is so when I first started crowdfunding, I kind of ran ads to get like sort of like email addresses and things like that. One thing I've learned hugely since then is that's fine, but what you never know really what percentage of those leads are ever going to convert, because if you're just running, like I say, a lead gen campaign on Meta or something, you go into a campaign really, especially if you don't have an existing audience. One thing now, obviously, is that if we launch on something like Kickstarter or we launch on our own website, we know maybe a certain percentage of that is going to come already from our existing email list. So obviously, it's a lot easier now because of that. But if I had to, starting off from scratch with no existing customer base, one thing I would do is get people to almost almost pay like a VIP reservation, like say $1 or £1, right, to get early access. And what happens is that what I found as well is that when you get customers to do that, it's almost like a hard opt-in where they kind of really commit to it. Even if it's just $1, you think that most people, but the fact they've done that, usually I find like makes them maybe 3 or 4 times more likely to actually back your campaign. And so you can, and this is actually not my idea. I got it from a book I read on I think it's called Crowdfunded by the guy started Launch Boom, who's like their big crowdfunding agency. But I read the book after I did that campaign. I thought, oh wow, that's what I did wrong, because a lot of these email addresses, like I couldn't validate whether how warm they were, how likely they were to back the campaign, especially when you haven't got an existing customer base to kind of gauge from. So I think if you're starting something very much from scratch, I get customers to do that, because it really shows whether they're really committed to actually backing your project or not. Because if they really aren't, they're not going to bother just going through checkout, regardless of paying $1, just wasting their time through checkout. There's one thing is putting your email address in. The other thing is like going away through checkout and putting address and card in and everything. So even if it's 1 penny, just the fact they've done that shows a bit more commitment. So I think, and then also I think even when you're running ads, when somebody, if that's the objective, the algorithm is then learning based on people who have done that versus people who have just put the email address in. So that's something I would definitely do, I think, especially starting out from scratch.
Yeah. And then let's see what other tactics that you know from your book reading and from your experience. Maths on perks and stretch goals. What would your strategy be on that side of things now?
Yeah, I think keep it simple. That's one thing as well. I think sometimes when there's too many options, it can get very overwhelming, especially if you're doing it on a platform like Kickstarter, where I just don't think the information is particularly well conveyed anyway. I think it's confusing for even, I mean, you obviously get people on the platform who have backed 5-10 things, but I think trying to make it simple. Often I find actually if you're looking to kind of increase how much people are sometimes just having them buy 2 is often better than trying to add add-ons and things and all this, because actually it just makes the whole decision process simpler. And often they'll think, well, actually I want this, and I know my my husband or my wife or my son or daughter would want this, so I'll back it. I'm getting a discount on both. Maybe there's a bigger discount for buying 2. Often things like that, like volume things, often actually are higher converting, I think, on those sort of things, than actually kind of trying to upsell them on stuff on a Kickstarter campaign.
Yeah. Any sort of virality sort of tactics or anything that you've learned, or that are you going to keep those a secret from everybody else?
I think the virality is interesting. That's something I'm trying to work on a lot, because I think that from the Kickstarter platform, I think the main kind of selling point of using Kickstarter is the virality on the platform. I think that one thing we struggle with when you try and do pre-orders on your own like Shopify site is getting that kind of virality, because you can get somebody, you can run an ad and get someone to back it, or you can have your community back it. But how do you get that to reach beyond that is hard. And one thing I've started to work on, I mean, this is kind of we've just custom done this. It's kind of almost a referral system in Shopify, where we kind of almost have like a live waiting list, or like a live just like connected within like Airtable or something, where people can kind of see who's backed it. People can start. We then in the back end, if they share it, we give them like perks or free gift or something. That's kind of what we started to do, in just to kind of get it to move beyond that. But I think it is actually quite a pain point in crowdfunding in general, is like beyond, say, the platform and the audience it has, which is why most people still go to someone like Kickstarter, is it's got that audience. And but I think there's a lot of opportunity actually for someone to come out there and design like an app that has like the referral element of pre-orders as well.
Yeah. Would you ever go back to like a Kickstarter and try and launch a new product or anything there?
Yeah, I mean, I debate it every time we launch. Here's my problem with Kickstarter, and maybe I think once you get bigger and bigger and bigger, actually, there's almost more benefit of being on Kickstarter, because you can often hedge your bets, start to actually fund production before you even hit the platform, which is what a lot of brands do, like bigger brands. I mean, even someone like Peak Design, like I mentioned, I'm pretty sure that they're in production before they even launch. But then they can just kind of scale things up or down depending on the demand, which is why they still use it. But also, I mean, Kickstarter is a 30-day campaign. I think it's another 2 weeks or so after that to get paid. So if cash flow is your priority, it's not easy, because you're going a month and a half without receiving a penny after having maybe you just running ads on that campaign. Whereas if you run it through your own site or something, you get that money immediately. So you can then reinvest that back in. And so the reason we've done it more recently, through say our own Shopify store and stuff, is that we get that money in, and we can then put it straight back in to kind of growing the campaign, versus on Kickstarter, it's like, well, let's put a certain amount of money behind this and hope we hit our goal. We can't really spend beyond that, because there's no money coming in at least from that campaign, for the next 6 weeks.
Oh, gotcha. That's tough. Like, because you're doing the crowdfunding because you want to get the money to help you fund the project. So it's, it's almost like if you're not in production, if you don't have any capital beforehand, it's almost impossible to then only start. You can only start then once you get the cash.
Well, exactly. I think the idea originally behind Kickstarter was you didn't start production until you got the cash, right? Which is fine. Not everyone's willing to, especially depending on how long your lead time is. Like our bags have quite a long lead time. And I think that we can just speed that whole process up doing it outside the platform. But I mean, that's not to say there's a huge amount of benefits of using these platforms. I think that the network effect in themselves is like a huge benefit. So it's kind of a case of just weighing those things up, I think, when you're launching.
Yeah.
Jack, one of the things that I'm curious on here is on what your take on it is that I feel like with yourself and with your products, obviously, like you said right at the start there, the idea is that you created something that was solving an issue that was different to the competition. You were taking a different approach. And yeah, my feel is like that is probably a reason why, again, with that crowdfunding method, is that you've got people on there who are looking for that thing to solve a problem. Do you think that's accurate in terms of, what I'm playing at here is that there might be some people listening to this going, oh yeah, crowdfunding sounds great, but if you, for example, just have, another standard face cream and there isn't really anything different to your competition apart from the brand, is that necessarily a good route to go in your opinion?
Very good. Yeah, it's a good point. I think it definitely is more conducive to the product category we're in. But I do think there's still a lot of like takeaways. So for example, I mentioned like limited drops and things like that sort of thing is still hugely powerful. And I still kind of, in my head, think of it under almost this kind of crowdfunding umbrella, because you're really, you're still kind of hedging your bets against things, engaging against the market and getting people to kind of do something early. And I think that's where drops have kind of become quite popular over the last few years, is that you can actually sell out of something quite quickly, quicker than you would have if you just, otherwise. And then it gives you that cash up front. Instead of it being over 3 weeks, you've got it in a day. And then suddenly you can reinvest that into making more product if it's done well. And you can start off with a limited amount. So it's one of those things where, and it's, as opposed to ordering 10,000 of something and having all that cash tied up in inventory and then having to sell it over the next 3 or 4 months, you sell 1,000 and or 500, whatever it is, you get that cash immediately and you put it back into the next thing. And I think crowdfunding, in my opinion, is not just getting people to back what you're doing. It's finding ways to kind of shorten that cash conversion cycle and being able to reinvest it back in as quickly as possible without tying it up in inventory, which is a mistake I've made many times.
Sure. I mean, look, you definitely sold that to me. I think, look, in terms of limited drops, and I guess the other thing with that too is that you're also kind of protecting the brand, aren't you? Because let's say, for example, you do a limited drop and actually the product isn't as great as you expected it to be. Well, it was just a limited drop. It doesn't probably damage the brand that much because it was just, kind of a thing that came in. If it does go well, obviously, then you make it a permanent sort of part of the furniture. So I think it makes a lot of sense from a funding and a business point of view. But moving on from the kind of the crowdfunding piece there, after obviously you did the crowdfunding, I know you kind of had some chats with kind of angel networks. How do you think the best way to go about is sort of deciding on, look, is an angel chat worth the dilution compared, say, with kind of one of the revenue-based sort of advances?
Yeah, I mean, I think it's a case of margin at the end of the day. If you can make the margin work, I think loans are always, in my opinion, loans are better. I mean, but that being said, if you can't make the margin work, is that you shouldn't pretend that you can make the margin work. So, if you're paying 25% of your sales back or something, or you're paying a certain amount of interest, over the course of a year on a bank loan or whatever it is that you get a loan, if you think that's going to prevent you from then being able to make reorder the next amount of product or to whatever it is, I think you've got to be able to understand the key thing. The problem comes, and I've done this many times, is making those decisions on emotional thing, thinking, well, I just need this money and I need to order more product, and if I don't get this product in, I'm not going to have stuff for Black Friday and whatever it is. And I understand that because it's stressful, but at the same time, if you haven't said, well, let's stand back a minute, am I actually going to lose money on this in the long term because of the percent I'm giving back here is so overwhelming that I'm going to struggle from a margin perspective? Or do I need to make some changes in my business so that I'm spending less on X so I can cover that margin? That's another thing. So I think it's a case of kind of working those things out and then kind of making a decision from there.
I mean, that's the thing, is I guess the sort of foreign point here, I guess, a little bit like with kind of personal finance as well, is it's that kind of cost of capital piece, sort of the headline rate and that effective APR that you would kind of, get as well from a personal, funding and how that all works. With, an interesting look, this question was obviously written before we got to the podcast, but I actually had an email this morning whereby we had someone come and approach Blend and say, look, we can give you caps in 24 hours. Now, obviously, there's a, from my point of view, it wasn't like, yes, okay, please show me the money. But when you are kind of getting those approaches, from sort of, fintech lenders, is there any sort of is there sort of a personal checklist that you would write now based on obviously lessons you think you've learned about assessing who you take cash from?
Yeah. I think definitely a due diligence piece in terms of like who you're working with. Because I mean, like, I think we all get emails, offering things, and whether it's finance, whether it's something else, and most of the time those get ignored. But I think that it's a case of understanding where, like, your situation, and just being able to I think one thing, again, going back to like the e-commerce community itself, is that you can learn a huge amount from what other people have gone through, and you can, in the various communities I'm in, I can usually kind of pop a message through and say, like, has anyone raised money? Has anyone accepted money from this lender? Has anyone worked with these people before? And there's often a huge amount of if it's a lender that's been around for a little while, not even a huge amount of time, for a little while, usually there's people who can provide you feedback on that and what their experience was. And I definitely do that anytime I look into things like that.
Excellent, thank you.
You touched on this a little bit earlier. When you get those funds, it's like, okay, well, what do I do with these funds? How do you protect your margins, keep them intact, and then you go, what's your rule of thumb for deciding what you can spend that money that you've got, that funded money, versus the things like, hell no, I'm not spending not even a cent of that money on this thing?
It's really tough, because I think you do have to take swings as well, right? I think, we launched a new bag for paddle very recently, which I thought was a good opportunity, given how that market's moving and things like that. But it was also a risk, tying up inventory in a new product. And as much as I've kind of talked about trying to find ways of mitigating that, it is, when you've got cash coming in, trying to understand where to put it is really hard. And I've spent money unwisely in a variety of different things, whether it's sending stuff to a new 3PL, or and then getting tons of fees over the course of the next 3 or 4 months I didn't expect, or money can be wasted in many different ways. That's the thing. And so and product might be one of them, or it might not. It might be that's the swing to take. I think it's a case of, like, you just have to kind of you have to pick your battles. But I think also a big problem, I think, is sometimes where money gets siphoned off in many different areas. So there are sometimes you make a big decision on something, but sometimes it's actually the other 10 things that have siphoned off a tenth of that, but each, so that's something I think is really important as well. I think just going back to margins, I think something I've this year been really focused on is, like, I really didn't spend enough time just, like, monitoring, like, cash flowing in and out, in terms of from the bank, like just looking at the bank balance on every Friday when I finish, the week's work, just saying, where am I this Friday in comparison to last Friday, in comparison to the Friday before that, taking into account maybe I had to, spend X on buying more inventory, or taking into account, but, like, how am I doing in, over that course, and just like the diligence there. And then also, like, things like new customer margin. It very much depends on your product, right? Our product, we have to be profitable on new customers, because, we do have to be profitable on new customers, because we're not like a subscription product. But I often think, even with subscription products, the default thinking is, well, I don't need to be net new customer profitable. I understand, like, with meta ads and things like that, but like, one thing I've come to learn in that case, like, meta ads can only be a certain percentage of, like, your acquisition, because as much as, like, scale is important, like, I think margin is even more important. It's taken me a long time to get there, because I've very much kind of inadvertently been thinking about scale, even like sort of getting up to a certain scale, even if it's like break even versus maintaining margins. And I've realized, like, how much better I sleep at night now, being able to just, like, even being like more risk adverse and maybe not always taking as many swings, but like maintaining margins, like how much easier life has got since then, I think.
So on that note of being able to sleep at night, mate, external money adds a hell of a lot of external pressure.
It does, yeah.
How do you keep that mental bandwidth intact, and how are you keeping the investors happy and the people that where you're getting that money from, and making sure that you got to meet your obligations? What are you doing to just make sure that you keeping that all in check?
Yeah, well, I mean, I think a tough thing actually is when you get more profitability focused. Not all investors actually like that, because they're worried that their investment won't hit the return that they'd hoped for, because you're hitting basically lower revenue goals. And that's actually a really tough thing, because at the end of the day, you still have to prioritize the health of the business as much as like investors have a say, as much as that you have to kind of like listen to them, and as much as they own part of the company. You just if you're in that situation, you do have to just understand that you're not going to please everyone, and I think the communication is really key. But that's been a really hard thing, I think, is that investors do want they're almost, I mean, I can't tell you how many like investors that have or haven't invested, not we've had huge amounts of investment, but like people just say to me, oh, you need to raise this much money, and like just get to a certain point where you've got this much revenue coming in. Don't worry about like, and that's all very well said and done, but like e-commerce is just not conducive to that. It's just not a business where you can make that work most of the time. You have to, focus on profitability. So I think that my understanding of that has helped. And so even when it's tough situations and tough, I think I kind of understand the dynamics better. And I think the other thing is just communication. Is just, I think most people who put money into something just want to be up to date with what things are going on, more than being worried about performance over a given month, because I think that most people are in for the long term.
Yeah, and from your experience, which are the investor types that are wanting to drive that revenue versus the profitability? Is it the angels? Is it the VCs?
Well,
who's driving that?
Yeah, sorry, we've only raised from angels, so I can't speak to VCs. I don't know, but I mean, I have met people who have raised from VCs, and it definitely seems like they're more on that. And I think I say that investors tend to kind of be focused more on the revenue side of things because of like thinking about that long-term return. I mean, I say that, but it's not like entirely so. I mean, I think that most angel investors still kind of have a quite grounded in reality, and understand that that actually how how a business operates and things like that. So I think I've been very lucky to the people who have invested in Cancha being hugely good mentors and things like that. So I think probably VCs are going to be even stronger on that front, but not that we've raised from them.
Yeah. So you've mentioned that obviously that your mentors actually coming from your angel investors. If we think of the likes of the Shark Tanks and the Dragon's Den, and people going out and getting finance specifically to get those mentors involved, is that something that you set out to do, or is it just like that's a added benefit of getting that cash from those guys?
I mean, I've definitely found that some investors are more interested in being mentors, or understanding, or chatting. There's one in particular, I mean, message me every week just asking, just the question like, how are you on a scale of 1 to 10 sort of thing, like how are you feeling on a scale of 1 to 10, sort of things like that. And that's really nice that somebody's thinking like caring about you, kind of like, and not I think that's hugely beneficial, because someone who's actually caring about your well-being and stuff as well, and not necessarily just like how much money did you make this week sort of thing. So it just depends. I think when you start to meet these people, some of them show more of an inclination than others, I think.
Do you sell stuff online? Then you need OmniSend. Yes, that OmniSend. The powerful yet refreshingly intuitive email and SMS tool that helps you make $73 on average for every dollar spent. Like watching steady lines go up and up and up? Just automate your email and SMS campaigns with OmniSend. Set it up once, then sit back and watch the sales roll in while you snooze. You're still awake? Then go to omnisend.com/ECC. Give OmniSend a try and start getting sales so steady they'll definitely put you to sleep. Don't forget to use code ECC30 for a 30% discount.
So Jack, you guys sort of went global pretty early on, didn't you? Sort of expanded worldwide. And I suppose looking at that point specifically, would you, if you go back in time, would you prioritize maybe making one market very profitable before going global? Or would you do exactly what you've done again?
Yeah, I think what happened with for me is that when I started Cancha, I was noticing, especially in the tennis side of things, I actually grew up in the US. So I was born in the US. My parents are British, and so I spent the first like 10 years in the US, and then came, or 12 years, and then came back to the UK. And so I built up sort of in the tennis side of things, people I'd met in the US and stuff like that. But I'd set up Cancha in the UK because that's where I was living. And because of that, I was seeing a lot more opportunity in the US than I was in the UK at the time. And so I was kind of pushing things that way, and then and selling more in the US. It just felt like an easier thing to do for me at the time. And then we ended up kind of I had met people from other places in the tennis world, and then I ended up selling in like Asia, particularly in Europe a little bit, and just ended up kind of selling all around and kind of just saying, well, let's just do it everywhere. Any place anyone wants to buy one of my bags from, we'll ship it there.
Mm.
And the problem is like, first of all, shipping is shipping is a really important thing to keep control of, and it's a much easier when you're focused on one market, because you can kind of start to figure out kind of like what shipping makes sense, like what charge over this, charge under that. Do you offer free shipping over this? Am I still making enough money when I do that? What about this size of product? And our bags are fair light but fairly big, and so dimensional weights internationally can get very expensive because they're not but charging you on what a product weighs. They're charging you what the dimensional weight is, which is often 3 times what it weighs. So that's really tough, especially when you're shipping someone in Japan, and from the US or from the UK, and it gets expensive. And so we lost a lot of money on that sort of thing. And again, the time I was like, well, yeah, but it's better to just build up sales in those areas, and even if I'm kind of losing on shipping. But the problem is that it becomes a nightmare to manage, because you're starting to kind of figure out what the margins are in Japan versus in US versus in Europe versus in the UK versus. And one thing also we did is we made the mistake too early of starting to try, and we started to say, well, okay, well, we had our stock stored in the UK, and I said, well, why don't, given that most of our sales in the US, why don't I start sending stock to the US? Then, of course, I started splitting stock between the UK and the US, and you've got where one product is out of stock in one country, is in stock in another country. So then you're split shipping. So you're actually getting 2 shipping bills going to another place. Say you're shipping to Japan or something, and suddenly you've got one bag coming from the US, one bag coming from the UK, and what turned into maybe 25, 30 pounds of shipping is suddenly 100 pounds in shipping. And so it gets very, very difficult. And we still have this problem to this day. I mean, I've consolidated things a lot in terms of shipping. And I try and keep everything in one place, although tariffs haven't made that easy. But I try and keep things in one place, and that to just stop split shipping, and also things like new technologies like things like Shopify markets and things like that, where you can start to ship DDP to countries, and you start to figure out it's made it easier. But I definitely think focus on one market is a smarter solution. I mean, it's okay, for example, if you're selling in the UK and you also want to sell maybe to Europe, I can understand that, and I think it's fine to be available for shipping worldwide, but I think you almost have to focus on a market in terms of marketing, in terms of sales, in terms of where maybe 80-70% of your sales are come from, because that's where you're going to make sure your margins work, and you're going to be able to ship profitably, and you can start to test things and figure out what kind of shipping thresholds work. Whereas when you're shipping just everywhere, you never really know what's working.
Sure. But I suppose, look, combining some of the advice you've given today as well, maybe when you are thinking of new markets, maybe you'd say do that limited drop first, and just kind of use that, as sort of school fees, in the sense of, look, we can work out, what the realities are from a cost point of view. Because I think this is the thing, is that with the best one in the world, you can try and plan for every eventuality, but until you've actually done it, you're not going to hit those specific roadblocks, are you, in terms of, say, taxation, shipping, things that crop up. You mentioned tariffs there, and obviously, look, there's a lot of stuff in the press at the moment. What I just wanted to ask you is that, at the moment, have you seen anything tangible that the tariffs from the US have affected you, or not particularly as yet?
I mean, it's affected our operations a little bit. We primarily ship out of the US, and the next sort of set of stock is now coming to the UK as a result of that. Although that being said, given changes, we probably could have still sent it to the US. But I think it definitely affects you operationally. I think it hasn't affected. It hasn't affected sales volume in the sense that I don't think even with other brands I've seen where they've increased their prices in results of tariffs, I haven't seen where it's massively affected demand. So I think the problem is that things have changed so rapidly. You can't attribute it to a certain decision made, because some brands got hit with 115% tariffs in May, and now they've got 30% or 20% tariffs. And so it's like, well, how much has that affected them? To what customers it affected? All those sorts of things is really hard to figure out. But I think that it definitely affects things operationally, and I think you almost got to plan for the operational side of things to be more complex and more complicated. But I think from a demand perspective, I think hopefully we'll still be okay.
Excellent. Okay, thank you very much, Peter. I think we've got some quick fires, haven't we?
We do have some quick fires to end off the session here. Jack, most overrated funding option in e-commerce right now?
Overrated. Oof.
Overrated.
I think, I don't know if it's overrated, but I do think, like, say, Shopify Capital is too easy. I think, it shows up in your dashboard, you suddenly see this big number being offered to you, and it's like a one-click, acceptance thing. And it's almost like so easy that it's hard to say no when you see that stuff coming up. And obviously you learn over time, but I'd say it's kind of overrated from Shopify's perspective. I think they push in your face a little bit too much. And I think it's nice. And I'm not saying like it doesn't help some brands and things, but I think that it's hurting a lot of brands as well.
Yeah. Is that because of the cost of it and the margin decrease off the back of that funding?
Yeah. I mean, I've got a friend who's got a Wayflyer loan, a Shopify Capital loan. It's taking 35% of his daily sales. It's hard to survive on that, right? So it's very easy to get into that situation, especially they offer top-ups as well. So, before you even got a chance to pay it all off, you could potentially get more funding. And often you get into this cycle of just paying off loans. So I think that's, I think it's people have to be wary of that. Yeah,
it's almost like a little gateway drug into getting that funding, and then just you feel like, okay, I need a little bit more now. Let's go for that. All right. And then on the flip side of that, most underrated way to raise capital.
I'd say your customers, I think is a big one. I mean, I view capital as well as just like also ways to cover costs, because often makes a big difference as well. So looking at innovative ways to kind of to cover costs. I mean, people talk about things like negative CAC and stuff like that. But if there's if you've got an audience or something, and you can kind of make it work where you're utilizing that in a different way and covering your costs from that, then it's also a good way to kind of keep your costs down and use more money for growth.
One clause you check before signing any finance agreement?
I definitely check if there's. I think I've seen quite a few recently where it prevents you from taking funding from anywhere else, which is maybe a good thing, but also got to be wary of that, because sometimes they completely prevent you from like taking any source of money from anywhere, which is quite constraining in some situations. So I always look for that.
Your go-to stress buster when founder life feels like a fifth set tiebreak. There you go. How to get the tennis into here, huh?
Well, funnily enough, tennis is like my outlet now. So, I mean, I still play a lot. I say probably 3 or 4 times a week, and just being able to, like, when things aren't going so well, being able to get on the court and do another thing that I love is definitely a good like outlet for me.
Yeah, that's good that you've still got that and you didn't burn yourself out too much being a pro, because I think a lot of people just go, "Fuck, I don't ever want to do this again."
Yeah, I certainly got close. Yeah.
And one final one to end off there. Single-handed backhand or a double-handed backhand?
Single-hander. I'm a single-hander.
It
depends. If you want to look good, single-hander. If you want to win matches, double-hander.
Awesome. Look, Jack, thanks so much for coming onto the podcast today, man. It's been a pleasure to listen to you. I think there is a ton of advice here for people that are starting out and people that are looking to actually get into the game of using some funds to grow. I think can learn a lot from off the back of this. So yeah, really appreciate you coming on, mate.
Thanks for having me. I've had a blast. Thanks a lot.
You're most welcome, Jack. And guys, thank you to you for listening. As I do, obviously check out Jack and Cancha, and all the details that you need will be obviously in the listing for the podcast. And if you have liked what you listened to, do give us a like or a share on the listening platform of your choice. Cheers.
Cheers. I just checked up the link to his site there as well. If anybody wants to check that out, we'll put that into the podcast notes as well.
Thanks for listening to the Ecom Collab Club podcast. Make sure you like, subscribe, and join our community at ecomcollabclub.com/community.